Hello, I'm Jonathan Reeves from Tax Matters, and today I'm here with...
Claire Hancock from Profit Cash Growth.
And this video is today, we're going to talk about tax and accountancy because we're both qualified accountants in our own specialities. Mine is obviously tax and Claire's is...
I'm a finance director and I am a chartered management accountant.
And quite often we have different opinions about things, don't we, Claire?
Very much. Yeah. And I find this really interesting because people think, oh, you just need to go and ask your accountant. But it's like, being like a doctor, if you've got a bad back, you don't want to be asking your optician about it, do you?
And it's not just that, is it? You can ask different accountants and come up with different ideas and different structures all the time, especially when it comes to tax, because there are some very clever barristers out there as well who've got some tax planning opportunities. So... But we sort of try and keep it a bit more level, a bit more feet on the ground and do things the right way as we believe them to be. It's a good starting point anyway, Claire.
Yeah, so we're going to share our opinions with you as to how we would advise our clients if they were asking us these questions. And sometimes we agree, but actually more often we would be giving different professional advice, wouldn't we?
Yeah, definitely. So what are we going to talk about today then?
So today we're going to be answering the question that I think a lot of business owners have actually when it comes to them maybe getting a little bit bigger and thinking about buying a commercial property. And they will often ask, should my trading company buy the commercial property or should I set up a separate holding company that owns the commercial property?
Well, that's an easy one for me, Claire, and that's always should be a holding company. Always.
Oh, I think we might actually agree today then.
Yeah, well, hopefully. So I'm thinking you'd have a holding company because it protects the asset, doesn't it? You don't want it to be in the trading company. If something goes wrong, then obviously that leaves that asset exposed to a creditor coming after it, which would be quite devastating for most businesses, wouldn't it?
Yeah,
if
absolutely.
they were to lose that. So by putting it in a holding company, it protects that.
So that is absolutely a really good thing. And I would say that's probably the number one consideration that I would have. Before we get to any of the tax implications, I would always say, okay, what's the risk that we're exposing ourselves to if we put it into the limited company? And that would probably be the perspective that I come from. And I would also suggest putting in a separate holding company. But I think one of the other benefits to having it in a separate holding company is that it gives you long-term options. Particularly, a lot of the business owners that I work with have got the ambition of one day maybe selling their business, so selling their trading company. And if you've got your property in a separate limited company, then it means that you can continue to own that even if you don't own your trading business. And actually what's really common is it's quite difficult for businesses to move commercial premises. So even if you sell your trading business, then the new owner is likely to continue to lease the building off of you. So you'd have some income for life potentially.
Yeah. So you have to sort of think about business asset disposal relief when you're thinking of selling a business, and that's not always straightforward. You talk about investment companies and trading companies, so that is something you do need specialist advice on, and lots of consideration. So
because if it's just one, just having one commercial property in a separate holding company is very different to if you've got multiple commercial properties as well. So I think it depends also, what's your strategy? Are you just buying the one commercial property that your trading business needs to use? Or do you actually have the ambition of becoming a commercial landlord and buy multiple and that being almost
and
like
that's if it's just one
business.
Property that you're trading your business out of, if you were to sell the shares in that company to someone else and that meant that all the assets were in there, then you get business asset disposal relief. Whereas if it wasn't, and it was more of an investment type company, then you wouldn't get it. And business asset disposal relief is worth having because it's like capital gains tax is the easiest way to explain it for those who don't understand. But for the first £1 million of disposals you make, they get taxed at 10% instead of 20%. So,
and that used to be known as entrepreneurs relief,
yes,
didn't it? And it changed, what was it, like 3
Finance Act
years
2020,
ago? 4 years ago now, So it's like the old entrepreneurs relief, but it definitely got tightened up a little bit, didn't it, as well? And it's not quite
Well, we've seen it come
easy.
down quite a lot from when it was first introduced at 10 million. We've seen it drop, and we live in fear of it disappearing altogether, don't we, at the moment?
Yeah, because one of the ways that people used to get the most entrepreneurs relief is when they went from being a sole trader to a limited company. You used to be able to get entrepreneurs relief then, didn't you?
Exactly.
And, most of that's been sort of tightened up on the legislation, and it's a bit more difficult to get BADR now, isn't it? So
yeah, it's not straightforward.
Yeah.
And as we always keep saying, it's very hard to give tax advice in a video like this because every case is very different. and every person is very different. Everyone's got different circumstances, so you do need to look and explore those those pitfalls, really,
Yeah.
for choice of a better word. Yeah.
Now, one of the benefits of commercial property is that regardless of whether you're buying it in a holding company or in your trading company, you can deduct the interest. So that is an allowable tax relief, and that's a little bit different to buy-to-let property. So it's one of the benefits of investing in commercial property. But you've also got to consider about how you're going to finance it as well, because, really, as a minimum, you're going to be looking at a 25% deposit to buy that commercial property. So you've got to have probably quite a substantial amount of cash flow in your business to be able to get that mortgage in the first place. So that's definitely a consideration for businesses.
And that's probably going to start with what we talked about in the past, Claire, is direct loan accounts, isn't it? So,
well, I think a lot of the businesses that are probably looking to buy their commercial premises have probably got a good amount of retained earnings and cash in their business, and so they could probably fund most of the deposit themselves. With the working capital that's already in their business, because they're going to be quite a substantial size when you get a bit more serious and you start thinking about buying a commercial property. So I think from that perspective, the most common thing to do is to have your trading company loan money to the holding company to pay for the deposit for the commercial premises. I think that's probably the structure that I see the most with the businesses that I work with. But yeah, by all means, you could put a director's loan into the business to pay for it as well, couldn't you?
And if you've got property in a trading company at the minute, you can move it into a holding company. You just need some clearance from HMRC, and there'll be no tax payable on that when you do that transaction as well.
Yeah, that is a really good point, actually, Jonathan, because if you've got residential buy-to-let, trying to move that around anywhere is virtually impossible. But with commercial property, it's so much easier to create and or change your structure depending on how your business evolves and how your personal needs evolve, which I think is a tremendous benefit of owning a commercial property.
I think commercial property, we're going to see an increase in interest in that sort of investment going forward, I think. And one of the other things that's interesting about commercial property over buy-to-let properties, you can get something called rollover relief.
Yes.
So if you sell a property and you buy another property within 3 years, you can wrap it all up into the purchase price, so there's no capital gains tax to pay, or corporation tax, as we call it, within a limited company structure. So that's worth having as well.
So that essentially means, so in layman's terms, rollover relief means that if you make $100,000 profit when you sell the commercial premises, if you're selling it, particularly if you're selling it to upgrade because you've grown your trading business, you've outgrown your premises and you need a new one, it means that you don't have to pay tax on the profit you make, as long as you reinvest those profits into buying your next commercial property.
And that's a 3-year window to do that.
Which it's just a phenomenal benefit of commercial property.
Definitely so.
Especially because if you think about the other option is if you're not buying commercial property, you've got to rent commercial property. And every time you go and get a new lease or move to a new premises, you've got all those legal fees, everything like that you've just got to keep shelling out for. And
more
you don't
costs
really
to a
get any
business.
tax relief on them.
Not getting, no, just more and more costs, and that's what you want to avoid. Oh, I definitely think commercial property is the way forward, definitely.
So I think this might be one of the options that we agree on then, that if you're going to buy a commercial property for your trading company, then we would agree that you put it into a separate holding company and don't buy it within your trading company.
Yeah, exactly. Definitely. Definitely.
Yeah.
Wow.
Wow, who would have thought?
Who would have thought that, Claire?
Resounding consensus. But if you found this helpful, then do leave a comment below, and also let us know if you've got any questions that you would like us to answer. We'll be bringing you a different question every week on Ask the Accountants.
Thank you very much. We'll see you next time.